Right, we now move on to the next panel, and I do already see the moderator of the panel with his guests already approaching the stage, and that is Duarte Pedreira. He is the moderator for this particular panel. It's titled Riding the Waves, Smoother Sailing Ahead for African Trade, and he will be inviting his guests to introduce themselves.
It's so great to see so many of you, and you know, quite frankly, one of the main reasons why we all decided to be on this side today is because we, unlike most of you, we don't have to wear a mask, so we'll be enjoying the next 50 minutes quite a bit. But aside from that, we are absolutely delighted to be back in Cape Town, back with GTR, and to see so many familiar faces. I must confess, I've been on the road already for about a week. I visited some friends and some clients in different countries already, and it makes such a big difference. It's absolutely incredible. The warmth and the welcoming and that we've been getting is just absolutely phenomenal. So it's great to be with you, and I hope to see as many of you as possible tonight. There's going to be quite a nice gathering. It's always an opportunity to connect, so I hope to see you there. But you know, all this COVID situation over the last couple of years, it also brought us some interesting lessons, didn't it? Because we're about, I'm told by the amazing GTR team, that we're about 400 in the room, which I believe fully. But now we've got another 400, 500 or so with us virtually. So this really democratizes the access to these platforms to particularly our African friends who aren't able to physically join us here in Cape Town, and I think that's absolutely wonderful. Now, for those of you who don't know me, my name is Duarte Pedreira. I head up emerging markets coverage for CAB, or Crown Agents Bank, as some of you may know it, and I am also a board member of the global trade finance industry body, the ITFA, where I have the privilege as well of looking after Africa as a region, amongst quite a few other things. So what are we trying to achieve here? So we've got a couple of days ahead of us, which, you know, I've had the pleasure of working with George and some of the other trade finance figures in Africa in developing this program, and I think it's absolutely remarkable. So our job here this morning, with all my distinguished panelists, will be to set more or less the scene, set a preamble. We're not going to delve too deep into each one of the topics, but we will absolutely make sure that we set the scene. So look, we're coming out of a pandemic, and all of a sudden, you know, as that wasn't enough, two of the world's most powerful nations, Russia and Ukraine, have engaged in conflict. And, you know, it's not just about the loss of life, which of course is tragic as it was during the pandemic, but it's also about you know, the impact that we'll most certainly have in financial markets. We've seen a lot of volatility over the last few days. And look, let's just take a very simple fact like the Africa traditional meal being very wheat-based. So where's wheat coming from? You know, Russia and Ukraine. So this may have a lot of onward impact. So we will look at where we are in terms of the recovery. I think we're kind of phasing out COVID. Certainly from where I come from, COVID doesn't seem to exist anymore, although it's still lingering. But in the UK, even if you have COVID, you can go out and about, which may be a bit of a stretch. And we'll try to see the status quo in Africa. We'll look at what's working, what's not working, the positions of the different players, and also, you know, for those of you who've been in panels that I've moderated, one of the key things for me is having a solutions-based conversation. I think that's very important, you know, seeing always the glass half full. So, without further ado, and perhaps starting with my dear friend Graham on my far right-hand side, if I could ask my distinguished panelists to introduce themselves. Graham, the floor is yours.
Thank you, Duarte. My name is Gwen. I work for Hellmann Worldwide Logistics, and I run their trade finance business in South Africa.
Thank you, Graham. Gwen?
Thank you very much. Should be.
Yeah, there we go.
Thanks very much, Duarte. My name is Gwen Mwaba. I'm the Director and Global Head for Trade Finance at the African Export and Import Bank, primarily focused on debt and correspondent banking for all of our clients across Africa.
Thank you, Gwen.
Hello. Thank you for inviting the IFC to this conference. I'm Nathalie Louat, Director for Trade and Supply Chain Finance. At IFC, we are the private sector arm of the World Bank, and we focus on emerging markets.
Thank you, Nathalie. Carl?
Good morning, everyone. I hope you can hear me. My name is Chirwa. I had international banking for Bank One when we were based in Mauritius, but we're focused on Sub-Saharan Africa.
Thank you very much. Carlos?
Good morning, everybody. So, Carlos Teixeira. I'm a global industry principal at Finastra, focusing on providing solutions in terms of technology for banks like all of you here today, and focusing on, above all, automating all that process.
Absolutely fantastic. Last but by no means least, Jackie.
Hi everyone, my name is Jackie Boyce. I look after Southern East Africa for SMBC on a trade finance perspective, and then also FIs holistically from a South African perspective.
Lovely.
Thanks.
Thank you, everybody. So, to get you active and make sure that you are as engaged in this discussion as we all are, can I challenge you to take part in a poll? It will be our only poll for the session, but I just want to feel the room in terms of where you are in relation to Africa's recovery from COVID and the socio-economic situation around COVID. I can't see the poll on our screens. Maybe it's no. Oh, there we go. So when compared to the start of the COVID pandemic, do you think Africa's socio-economic position in comparison with the rest of the world has improved, remained the same, or deteriorated? I'm guessing that's not just one response. Are you all that pessimistic? I'm going to give it 20 or 30 seconds. Maybe you're still logging in. I see some people trying to log in, desperately trying to log into the platform. Yeah, but I think we've got a bit of a consensus there. Just for context, right? I mean, I remember about 2 years ago, before all this thing kicked off, and we had to cancel GTR Cape Town with about a week's notice. The underlying themes were so positive, weren't they? We were talking about, of course, the ACFTA was hugely being discussed. Innovative solutions around financial technology, infrastructure development like we had never witnessed, and things were really, really looking very rosy. But if I read the room's opinion, although it's balancing out a little bit, but most people think that the situation has deteriorated. So, Graham, no pressure. What do you make of this?
So, Duarte, I'm normally a positive person, but yeah, I think the the negative side is definitely our feeling. I work for a logistics company, although I'm in the finance side. And from a logistics perspective, certainly Africa is struggling at the moment. I think if we take a step back in terms of what happened during the whole COVID thing, started in China, that lockdown on the world and world production had a significant effect on the rest of the world. And I think with that lockdown and also the travel lockdown which followed, which shut down the air freight side, there was very little movement of goods. And when that started up again, I think the startup was negative to the African environment because all the movements seemed to be focused on the profitable routes to Europe and to the Americans environment. And I think we're still struggling the effects of that. I think initially we saw congestions when goods were being delivered, and that resulted in ships coming back empty without the containers. And now we have a shortage of containers, and that has had catastrophic effects, I think, on specifically African trade. I think it has affected world trade. I think we've seen markets pricing increase significantly. I think if about 18 months ago, you probably paid $1,500 for a container. That's probably closer to $10,000 at the moment. It does seem to be receding a little bit, but isn't great and isn't sustainable. I think everything's focused on that whole east-west route, and we need to come up with solutions on how do we change that. I think the COVID illness as such, and I don't want to trivialize that, wasn't as significant as an illness in Africa, although 240,000 people did lose their lives. I think the challenge is more around the effects of the hard lockdowns on Africa, and I think the effect that it has left on Africa. I think the economies are struggling, and I think there are opportunities right now with the whole Russia-Ukraine scenario. As sad as it is, that should have been a big opportunity for Africa, but I think we are struggling at the moment.
I agree, but you know what? I'm African by heart. I may have been born in Portugal, but this is where I belong. And I don't disagree that unfortunately Africa has taken a bit of a step back, but that was also because the rest of the world has kind of hoarded resources, and quite frankly, But where I do think that Africa has shown yet again a lesson to the world is the fact that whilst in the UK where I live, continental Europe, the US, people were running around like headless chicken, not knowing what to do.
Yeah.
In Africa, it's natural because, unfortunately, we've had to live with malaria, for example, for decades and decades. So prevention in Africa is not foreign, right? So it was very interesting to see, and people that's why I completely disagree with the developed world versus emerging world dichotomy, because how developed is a world that can't deal with simple things such as, wash your hands or wear a mask or something like that.
Yeah.
Sorry, I'm ranting.
No, you're correct.
Thank you, Carl.
We've had other things other than COVID to worry about.
Exactly.
I always say to people that we have 10 things that can kill you before COVID in Africa.
Yes.
So with COVID, just take a number and wait your seats.
You're absolutely right. Now, Jackie, trade finance. So, okay, from a socioeconomic point of view, we may have taken a bit of a step back, but from a trade finance point of view, where were we? Because demand still seems to be there, but did supply take yet another step back?
Yeah. So, maybe I can start with the World Trade Organization says 80 to 90%, basically our trade finance covers 80 to 90% of trade flows for the world. And unfortunately, Africa already had a trade finance deficit before the pandemic. And then, we saw sort of panic erupt, and we had like the big players in the world, the global players, pulling down on committed revolving credit facilities. So all the funds just pulling out of Africa, having to go to those committed facilities, which is really sad at a time that Africa really needed many banks to step up to the plate. We then, it's along the lines of the world sneezes and Africa has to get, suffer the storm or the cold, And then we saw a lot of panic as the trade flows moved out of Africa. We saw worry in terms of the reserves of different countries. And then that's when we really saw uncommitted working capital facilities disappearing. Yeah. And it's really sad because that's, working capital facilities, even though they're theoretically short-term in nature, then for lifelong enduring, banks ask you to pay them back, but redraw and pay them back. So they're actually the longest form of financing available for companies. And we saw that pulled away, and I obviously was lucky enough to work for a bank that didn't do that. Yeah. But of course, we prudently managed our portfolios, and we were very much aware of what was going on and how we could best support our client base within Africa. And I think what's key for Africa going forward, and we started seeing this from the multilaterals and the DFIs, is the SME financing. So we saw that coming in, and that's really what we needed, and we need that to be sustainable. I got joy in my heart when I saw what Safaricom was doing in Kenya, and it was really, how do you finance the last mile? And that's what we need. We can't have funds coming in, not applying Basel, going under or just coming in for the quick return and then disappearing, because that affects people on a day-to-day basis. It affects economies on a day-to-day basis. And we need those jobs. We need the job creation at the micro level in order to expand the economies. And, if we get infrastructure going again, etc., that's when we're really going to start seeing Africa taking off. So I think that's really where I saw it and where I'm seeing it going.
I couldn't agree more. I think, and we'll go a bit deeper on the SME space. Of course, this wouldn't be a GTR panel if we didn't talk about the trade finance gap. So watch this space. But before we do that, it is true. I mean, as it happens, and we need to be realistic. And I know that everybody wants to say, "Oh no, I didn't do it," but we all ran for the hills, didn't we? So, Nathalie, you saw some increased business on the back of that because banks all of a sudden came to you more and more for support, didn't they?
That's true, because what we're seeing is that even if there was a little bit of a positive trend right at the end of COVID, there's still many discrepancies among the regions and the continents. And so we had, in general, and this is not just focused on Africa, but we had, in general, developing economies that were falling behind and needing support. So the trade finance gap globally is 1.7 billion, but it's even higher in certain areas, including in Africa. Before the war between Russia and Ukraine, we estimated it would take 1 or 2 years for some of these regions to catch up. And so now we are keeping an eye on the impact of the most recent crisis to see if that would be extended, unfortunately. We surveyed our client banks, and we heard back from 151 banks across 60 countries. 95% of these banks said their customers were facing shortfalls in financing and operational challenges. And 43% of the respondents mentioned that their confirming bank limits were decreased. Mm-hmm. So they had even less access to trade finance. 25% of the banks in Africa mentioned that these lines required cash collateral, which they found very difficult to provide. So it is indicating that the economic effects of COVID-19 are still present, and will take a while for these banks to be able to manage the demand. 87% of these banks mentioned that they need the support of DFIs, and so yes, you're right, our business has been greatly increasing. To date, we have done 23 billion of trade and working capital financing in emerging markets. So under the global trade finance program, we cover approximately 73 countries. And it's very striking that 70% of that business is coming from the low income and fragile countries. It's a very significant percentage, even for IFC business overall. Trade is mainly needed in those countries. So Africa is the largest region for us at IFC, and we are launching a 1 billion initiative that will include traditional trade finance, but also support to SMEs, because as Jackie mentioned, we think that you have to start by developing these companies to bring them to export. We're also supporting intra-Africa trade. So we look to the Africa continent trade agreement as a way to grow that business. We can look also at the banks in Africa as confirming banks. They used to represent 16% of our portfolio only, and that has doubled to 32% over 10 years. So we think that's a very positive trend to develop the intra-Africa trade and keep growing trade in Africa.
Thank you, Nathalie. So, Carl, I need to put you on the spot here because you've been doing trade finance in this continent for, well, a long time.
Yeah, please don't give away my age.
I'm not gonna give you away.
Yeah.
But do you know what are the good sectors and the bad sectors?
Yeah, that's a really interesting question. I don't think there are good sectors and bad sectors. It's a way of how we should tell our stories, right?
Yeah.
Right now, I think the big buzzwords right now is ESG, and I'm glad Natalie's on the panel. So, Nathalie, I really need you to hear this. For Africa, ESG should be the other way around. It should be GSE, right? Because we're getting a lot of, funds from the Western countries, European countries saying, carbon neutral, climate, environment. Sure, environment is great. We all know we need to take care of the environment. But if you look at Africa, we need to have a much more nuanced discussion. Some of the sectors that are being told don't do this, oil and gas, tobacco, for example, for a small country like Malawi, which produces 60% of its export revenues, employs 3 million people, and you're being told don't do that. These are people in poverty. What else are they going to do, right?
Exactly.
So for us, my sectors, I would say, look, fix the governance, which we all know in Africa we need to fix governance. The West has fixed its governance, so they are way ahead of the curve. We need to fix our social fabric. We don't have social safety nets, which came out during COVID. We don't have that fiscal space to really support people in a crisis. And then we can fix the environment, right? Because you can tell somebody to take care of the environment if they can't even take care of themselves.
Exactly.
Right?
Exactly.
Their horizon is like, you're thinking climate change, 20 years from now, rising sea levels. They don't have that planning horizon. For them, the future is, what's for lunch? How am I going to feed my kids, right? And you say, don't deforest, don't cut down trees. What else am I going to do to light a fire? You're living on less than $2 a day, and you ask me to buy renewable energy? You see, I don't think it's good and bad. It's about having a upfront conversation. So I don't think oil and gas is bad. It's about nuancing it, right? I don't think tobacco is bad. It's about nuancing it, right? I don't think there are bad sectors. It's about where are you on the development curve. And I think as Africans, we need to start telling better stories to our funders and our financiers, all right? I believe somebody agrees with me that for us, the G and the S are much more important and immediate than the E. But if you fix the social, then people start caring about the environment immediately, because I'm not thinking 20 years if I can't think of tomorrow.
I agree entirely. Do you know what? I mean, I don't hide it. Some of you may not like what I'm about to say, and certainly doesn't represent the official version, the official Crown Agents Bank voice, but I'm a huge supporter of His Excellency Paul Kagame.
Yes.
And if we want to talk about governance in Africa, that gentleman has some lessons to give to all of us. In fact, globally, where for example, and we talked. It was International Women's Day a couple of days ago, the whole government, the majority of government in Rwanda is done by women. Thank you, Carl. Gwen, you and Afreximbank, and I'm a huge supporter, you know this, so I always sing your praises and the team's praises. You've been doing an amazing job, you know, during the COVID pandemic, you've been out there. And I know that you've been doing bits and bobs on the, and perhaps that's an understatement, but on the SME side. Every time, and Jackie has alluded to this already, we had these panels pre-COVID. We would talk about, oh, trade finance gap, everybody knew their figures and the reasons, and it was all SME focused. But how do we stop talking about it and actually implement something?
Yeah, no, thanks very much, Duarte, and you're absolutely right. The trade financing gap, I think, remains the bane of all of our lives. It's persisting, particularly in Africa, and I think many of us know that the major constituents within that trade financing gap are SMEs. And the reason SMEs are the largest constituent is because they have a much higher rejection rate when it comes to access to credit. I think research has shown that the SME rejection rate when it comes to access to credit is around 45%, compared to large corporates or multinationals whose rejection rate is around 17%. So this contributes to why that trade financing gap is persisting. So if we don't solve the underlying reasons as to why SMEs have such a high rejection rate, unfortunately, we'll continue talking about it on panels. Now, maybe just to give some context as to some of the reasons that we have found SMEs have such a high rejection rate. One is lenders tend to set quite high thresholds when it comes to access to finance. And I'm not saying that's good or bad. They're all protecting shareholders' capital, etc. And then also we find that many SMEs, particularly in Africa, Carl alluded to it, poor or weak governance structures, which the banks would expect to see. They don't have simple things like 3 years audited accounts, for example. You know, so all of these things contribute. So in terms of solutioning some of these impediments, I mean, DFIs such as Afreximbank have sort of taken a step back and said, look, these problems are not going to go away, but how can we be part of the solution? And there's a couple of things that we and other organizations are doing, particularly when it comes to SMEs. First of all, just to mention that because it's difficult for many organizations, including our own, to reach SMEs directly, one of the things that we did a couple of years ago was identify factoring as a financing tool or mechanism, which is quite suitable to the SME market. So, but when we started to try and implement factoring by bringing up factors who we support with help with setting up their businesses and also providing the financing, they couldn't deploy that capital. And when we dug deeper, we found that the reason there was this apprehension by the factors to set up businesses across Africa was there was no law that would protect factors in most African countries. God forbid should they enter a dispute. I think the closest comparison was contract law. So some of those who were bold said, well, I'll take a chance and I'll rely on contract law should I need to fall back on the law. So we had to halt the program and go back and build a model law for Africa, working with UNCITRAL and FCI. And this model law is now being adopted by a number of countries, and we are seeing the re-emergence of factoring companies because they know that they will have protections under the law should there be a dispute. So that then leads into the need for more capacity building also for the SMEs. You know, all of those problems that I spoke about, how do we educate the SMEs so that they understand why it's important for lenders, you know, that they have 3 years audited accounts, that they have governance structures, that they have a good succession plan, etc. So Afreximbank is very involved in the capacity building side as well. We hold several workshops targeted at SMEs, factoring included, and there are many other institutions out there that do the same. But then, of course, the question remains, after capacity building, what about the financing? Because it's the trade financing gap that you're trying to solve. So because we and many institutions can't reach SMEs directly, we looking at alternative ways of reaching those SMEs in terms of alternative financing. So factoring I've mentioned, we're also looking at payables finance or reverse factoring, where you have an anchor buyer with a stream of SMEs, and you can then support the SMEs after you've eliminated their performance risk. I think Jackie alluded to the work of Safaricom in Kenya. The telcos are playing a very huge and significant role in supporting SMEs. And also a number of fintechs have started to move into the SME financing space. And I think collectively, if we continue to push these initiatives, we should come to a position where we start to see that trade financing gap narrow.
Thank you, Gwen. I agree entirely. And Carlos, I think technology will be a big part of this. And you and I have talked in different fora. I've got a bit of a crazy idea, which is, if the problem is, I look at an SME, and of course they won't have audited accounts, and quite frankly, who wants to look at their fiscal accounts? So the reality is they're run on an Excel spreadsheet, which represents the true nature of the company. So how can we capture that? And we've been talking about open banking for a while, and Europe kind of had a little bit of a car crash with open banking, but there's been some really good examples like India where it's worked really well. So if I've got that Excel spreadsheet, but then I've got access to the different banks' cash flows, that can kind of help me do the credit assessment. What's your view, Carlos, from a technology point of view?
So from what I've been seeing, and we at Finastra exploring multiple markets as a global player in this area, it's quite interesting to see that when we all, the world stands still around COVID, technology was never the issue. Right, was really the access to the technology and how it was being promoted downstreams. And when I hear things like what we're mentioning around the last mile in terms of financing, it all goes down to exactly that point, the data, right? Because the way you are able to digitize and to promote digital data, then you can do better KYC. If you can do better KYC, then you can understand what type of transactions that individual or that company does. You can do better KYT from that side. And then we start immediately leveraging all that data and aggregating so that financial institutions like yourselves are able to take better decisions and be able to go downstream, be able to start financing. Because the reality is that we all know about the trade finance gap. It got worse, of course. And again, with credit lines being pulled back and people getting worse and going back and thinking about sustainability, but it's not the time to think about sustainability because people need to leave from that perspective. So I totally agree with Carl from that side. It's how do you orchestrate this data? And we've been doing a lot of work with ICC on that space, initially focusing on Latin America by ICC point of view, where we are focusing on how we bridge this gap. And this was a commitment from my own CEO, Simon Paris, where on the back of the World Trade Board, from the World Trade Symposium, we committed to provide the technology that is necessary to provide the necessary data that then you can have financiers to fund that, understanding who is doing what and when, because it's a great example. Safaricom is a great example, but what do they have? Well, they have the data of their users. Because while the banks are focusing on understanding performance because of creditworthiness, we understand that. You forget the other part. You have a party that is exporting every week. It may be in paper base, it may be not credit worth from a financial institution perspective, but from a supply chain perspective, absolutely. And Safaricom steps in and finances him because he understands him. So how do you orchestrate all this data and bring it together on the back and hopefully pushing forward the agenda of the AFCTA, right, from Africa to Africa? And we are really focusing as a software provider, bringing our TradeCom platform to start providing that data. And then connecting it with multiple rails, and I always remember the Afreximbank payment rails. Why not leveraging that and start pushing it across Africa? It's all about how we collaborate, because the reality is that even between financial institutions, and we know that you guys work together to address that, well done. But at the same time, we need to work with multiple vendors, providers of data aggregators, so that we all are able to go downstream to the last mile and finance the farmer that today sits in Ghana and he has no way to have access to credit. And this is where technology will be used to its best.
Agreed. Couldn't agree more. I think that's it's the data, access to data. Who has data will make good decisions and effectively will be able to enable the financing. Gwen, turning back to you, and I've alluded to the incredible role that you guys as the African Development Bank have played during the pandemic. But how important, and aside from the critical funding from the DFIs, how important are the international banks for the local banks' funding mix?
Yeah, thanks, Duarte. My view is they are critically important to funding. I think you can never have enough liquidity, particularly hard currency liquidity, especially in a place like Africa where many countries are struggling with availability of FX. So when you see international banks pulling out, it just worsens an already tight situation. And the reason why hard currency financing is important is two reasons. If I first of all touch on the SMEs, because SMEs don't meet international bank thresholds, and when you're talking about international banks, you have to throw in the KYC conversation. So even where they might meet the other criteria, they don't meet from a KYC perspective. So therefore, the only way for those SMEs to access financing is through African financial institutions. Now, the African financial institutions themselves need the FX liquidity.
Exactly.
You know, the African markets are awash with local currency liquidity, but where they are supporting clients who are exporting, it makes economic sense to finance that production with foreign currency because it's cheaper. Local currency is expensive. It's mostly double digits in most economies. So why increase the cost of production is high because of power issues, and then you layer on the higher cost of financing. So where SMEs and other corporates are exporting, I think it's only right to support them with hard currency liquidity. And the financial institutions is the key to, again, reaching that SME market.
I couldn't agree more. And I want to pick up on that because you mentioned that this hard currency is absolutely essential. And I'm going to turn to you, Carl, because the conundrum for me is one and only one, right? So we've been talking about de-risking, well, certainly ever since I joined Crown Agents Bank in 2016. And quite frankly, if we zoom into the de-risking conversation, it kind of, the focus point is the US dollar. Sometimes I even say, and I hope the regulators aren't listening, but are a little bit hostages of the US dollar. So why not? I mean, why are we trading between Uganda and China and using the US dollar in between? And I know that PAPS wants to, well, at least intra-Africa, wants to overcome this, but when we look outward, it's still very much dollar, dollar, dollar. So shouldn't we be focusing on diversifying our correspondent relationships into multi-currency accounts or local currency accounts, Carl?
Sure. I think that's probably a nice and lofty goal. I believe we'll get there. But at the moment, the reality is the dollar is still king, right? Unless, one of these digital currencies really takes off and then disrupts that whole thing, which I'm pretty much hoping it will. But if we need that disruption to take place. But back to Gwen's point, I think where we feel we play strongly as Bank One, because we're based out of Mauritius, and we see the global banks retreating, and I'm speaking to my good friends here from Citi, smiling because I used to be an ex-Citi banker.
Yes,
so we know, Barclays has pulled out, Credit Suisse has just announced they're out. Stanchart, they want to be here, they want to be there, they're not sure, right? We feel that that's a nice space for someone like us based out of Mauritius which is still the last, I would say, 2 investment-grade countries left in sub-Saharan Africa, leverage off that investment-grade rating to raise cheaper hard currency liquidity, and we recycle that back into the market. So most of my clients are actually African banks. I'd say 90%. So I try to tap those international markets, use my credit rating, and be able to now channel those funds to banks, and then they can now transmit that to the SMEs in their economies. So I see a nice space for us to play there, whilst it lasts. But long term, yes, I do agree with you that we need to be weaned off the dollar. But the geopolitics of the situation at the moment are not going to allow that. But I think Gwen and Afrexim has that nice settlement system that they're really putting together, and I really hope it works, where intra-Africa, I don't see why Kenya should not accept Tanzanian shillings or Uganda shillings. It doesn't make sense to me, right?
We at CAB, we focus not so much yet on the payment side of things, which you guys are doing brilliantly, but on the currencies, and we are seeing such a demand for intra-Africa crosses. It's so encouraging.
Duarte, may I just add,
yes, of
because
course, Carlos.
The FX point is it's really good to us to develop a bit more. And it's interesting to see, so the dollar for the China makes sense also because China wants to, right? Because of their reserves. So it makes sense.
Exactly.
And their relationship with US is not that straightforward. It has ups and downs, most downs and ups. So they force other parties to deal with them in dollars. So it makes sense. But what I find really interesting is that while in one hand you have the banks that have, let's say, some access to the foreign currency, and they need to select who is going to have access to that, normally the big corporates will take priority because that's where you get the money out. So we understand that. But at the same time, from a technology perspective, you see other players coming to the market having access to different payment rails, partnering with Visa, MasterCard, and for them, they don't have that issue, right? So I think that from a technology perspective, we also need to take a step back and say, I have my cost of funding this, and from the foreign currency perspective, I will go left for these customers, but I also need to service the downstream, and therefore I can use a different rail and mechanism, which is more expensive, we understand, but at the same time, you give access to the foreign currency to the lower end of the spectrum, ensuring that, again, it keeps moving the supply chain from that side. And all of this is, again, leveraging existing payment rails that are already established, again, Visa, MasterCard, and others, right, in order for you to leverage that as well and start offering those services and not just blocking it in terms of access to foreign currency.
Exactly. Graham, we talked about international banks and so on, but before the pandemic, another big topic around these conversations used to be the rise of alternative investors, and it was such an amazing success story, and I feel still very, very passionate about the work that is being done. And I'm not just saying that because Barack is sponsoring the drinks tonight, but there's been some deterioration, unfortunately, which is normal. Do you think that a certain exodus of capital from these alternative investors will move the dial?
Duarte, I think certainly in the South African environment, we are still seeing interest in the, from the alternative finance side. I think it hasn't helped the whole Greensill story. The local experience as well hasn't helped the industry too much. But I think there is certainly interest in environments where there are better returns, shorter term financing, annuity-based financing, which Jackie alluded to. I think there is definite interest there. I think the challenge that we have now is how do we bring that together? There are environments like pension funds, insurance companies, wealthy families that have funding to give and are looking for these alternatives. I think for us, it's about how do we bring that together? And I think the right word that Carlos used maybe was collaboration. I think we do need the fintechs to bring together the different components of the trade finance environment, and those components probably would be the likes of your logistics players, your credit insurance, your transit insurance, it would be your funders, etc. Bringing those all together and making it available as a package that then could be funded by these alternative investors. So I'm pretty optimistic about it. I think the fintechs are making it easier to move into that space, and I think that is the one environment that hasn't been affected by COVID or stood back during the COVID period, but it has advanced and moved forward. So I do believe there is positivity around that.
I agree with you entirely. I think one of the things that fascinates me about the alternative investors is that perhaps unlike not all banks, but some, especially in commodity finance and structured trading commodity finance, they do go the extra mile. So they're absolutely great structures, and we've got some of them amongst us. Jackie, turning to you, and I know this is one of your favorite topics around infrastructure, and you know, it's a great time to be in infrastructure financing, I guess. But firstly, perhaps, how did the ECAs and the private insurance market fare during COVID? Did they respond positively?
Yeah, so thanks. I actually do really like this topic, even though it's not my area of expertise. Yeah, so obviously we see the free trade agreement taking shape. But what we really need to see is we need to see the infrastructure and the roads to move the goods. We can't just have a road that ends at the border and no road to the next country. The free trade agreement doesn't work then. We need the goods to actually move. And in order for the goods to move, we need the infrastructure spend. And how do we get that infrastructure spend in the continent? And I think that's actually quite key. I mean, we've got the South African banks who are very focused right now on the energy sector. They're very involved doing all their project financings. And then we have the likes of Tanzania, who only wants local banks to be involved. And how do we bring in the ECAs and the DFIs and the partner banks, but still have local on-the-ground banks who are also earning the revenue and the fees and also part of the picture? So I think that's actually a challenge. Additionally, you know, if we take the expertise that's needed, of course we have the likes of IFC and Afrexim and very, very intelligent banks on the ground who are able to assist Africa with the development. But do we have enough skill set in the local banks? And I alluded to the South African banks and that skill set being very preoccupied with South Africa. And then we have some of the global banks who are very occupied with Europe, for instance, and they can say, you know, to close something in Angola or somewhere else is so bureaucratic that it can take years to close a simple project finance. You've got to find the minister who knows that. I'm not saying Angola specifically, like, yeah, you know, but you've got to find that person to sign the piece of paper. Is it not easier just to close a infrastructure project in Europe? You know, yeah. So I think that would be the big challenge to getting these developments off the ground, so to speak, to get the goods moving in terms of this free trade agreement, and really to bring it to the forefront. Of course, I mean, I don't need to teach economics to anyone here. We need development in order to people to be employed, to drive GDP, to drive trade, which is what's going to change the continent. So hand in hand, we can't just go, oh, we need trade. We also need the longer term infrastructure finance, and therefore we need the ECA teams coming in, helping us to develop that.
And you said what's going to change the continent, and it's kind the discussion took us in a way where we understood that international financing is important. We understood that maybe alternative investors are rebounding, but not quite there yet. And we all know that balance of payments out there are quite strained. We had the debt service suspension initiative and so on. And, you know, I know because we talked about this before, you and I, you have an interesting view on how we can plug the gap around potentially using more green and sustainability.
Yeah. Yeah, absolutely. And, you know, I was reading yesterday, and fortunately I'm not there to experience it. Mozambique has another cyclone on its way. Yeah. It has devastating impact on a highly indebted economy that really cannot, and this is what Carl was mentioning, they cannot now take what the little bit of money that they have left or the little bit of money that they have and develop green infrastructure, for instance. What they need to do is they need to save lives. They need to, they need to feed their population, but they're highly indebted. So what do we do? And, I want to throw a question out there to the world to say, maybe these developed countries who have made promises could consider, and this is far-fetched maybe, but they could consider debt swap. They could come in, do something green, swap out the debt, big picture perspectives here. But Mozambique, climate change, it's not their fault. Yeah. They're going to keep getting affected by it, and they're not going to be able to save themselves. So who's going to come help them?
Agreed. What do you think, Nathalie?
Just one more point, right? We think that the free trade agreement will lead to increase in the exports and transactions within Africa. And we think that a key element to this puzzle are the regional banks. We feel strongly that the regional banks will be able to channel these transactions. And so we are more than willing to look at ways to support them so that they can become confirming banks and support the other smaller local banks. So that's how we view the market growing.
And
Thank you.
If I may ask,
of course,
just on the sustainability point, until the moment that we stop treating sustainability as a tick in the box.
Exactly, right? That's so important.
It will never move ahead. That's the reality. And again, I go back to the way that big agenda led by Europe, as you can see, with a lot of grants being granted to a lot of banks to green finance and so on. But then you start asking, but how do you analyze your customer from a green finance perspective? And in most of the cases, it's either a SGS certificate or a questionnaire that it will reply yes or no. And becoming a tick in the box. Yeah. And until we are not able to go down the route, again, downstream, digitize the data,
yes,
right,
yes,
providing
yes.
the technology from the first point of contact, so that you all then can start understanding how is being dealt in terms of the farming and how is it being transformed, who parties are involved, follow the supply chain with aggregation of data from multiple parties. And going back to the point of Graham a while ago, we all know that from a financing perspective, it's more expensive if the goods are still in the exporter warehouse until the point that gets to the buyer's warehouse. It becomes cheaper because from a risk perspective, it's less. So all this aggregation is key for us to be able to push these multiple agendas, because not only sustainability is, again, also addressing the trade finance gap, going down the chain for the SMEs, and I will even say the MSMEs, so the smaller ones. Yeah. And so it is key that we all come together and we start pushing even further the digital agenda from the first contact.